Hello, everybody. I'm your host, Derek Bird, here at StopStrugglingNow.com. And today is another Twilight Zone adventure. Imagine, if you will, the date 1997 when you start your journey to create wealth. And yeah, you go through the dot-com bubble, bust, in 2000. You continue on with your journey in 2007, 2008. The economy crashes in the Great Recession. And here you are, thinking about retiring, and the pandemic in 2020. And all along the way, in all these crashes, you didn't prepare. You just kept putting your money in a 401k. You left it at the bank earning 0.1% interest. You never started your own business. Now you're under lockdown. Welcome to the Twilight Zone. And what are we going to do about it? You can start right now. Doesn't matter your age. Doesn't matter what job you have. It doesn't matter if you lost your job. We're going to talk about ways to create your wealth. So please stay tuned. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back. And how can I forget? We have gear in the blue, emerging millionaires, t-shirt and gear. Go to Stop Struggling Now and see the SSN merchandise link at the top. And now we're about to get into it. We're going to go on screen as usual so you can see the damage and devastation that's about to occur. But you can avoid it. So get your free shares of stock down below. Sign up with Webull. Sign up with Robinhood. Sign up for both of them. And if you want to start investing yourself without giving it to some other company that receives a bailout, a bank that receives bailouts, and you monitor your own money and earn your own returns, now's the time. Let's go. Here we are at the StopStrugglingNow.com YouTube channel page. And again, I want to thank everybody that we've reached over 5,000 subscribers and going. And please note the join button over here on the right side. Have new membership details coming soon. I'll be adding some emojis, special limited edition emojis for only channel members, and a few other channel members only live streams, community post, and things like that. So anyhow, the Twilight Zone editions continue, because who knew that when you see a financial advisor, they start telling you the stock market has done X amount over the last 20 years. And you're thinking, well, that's pretty good if I can get 6 or 7 or 8% on my money. But they don't tell you the rest that we've talked about before. If you're a subscriber, then you know that there are 0.5%, 1%, 2% even in some instances, where mutual funds or financial planners take your money due to annual maintenance fees, as they call it. Think about it. They're siphoning your wealth. So why not do it yourself? You can open accounts in a brokerage firm such as Webull and IRA. The only reason I'm talking about Webull and IRA and Robinhood is because you get free shares of stock simply for signing up. And you get 1 free share of stock just for signing up, not depositing money on the platform, but just for signing up. You'll get a $2, I think, what do they call it, $2.50 stock up to $1,400 stock. And I'll just be candid. The highest stock that I've ever received was Snapchat, which I think is $13 or $12. So some people might have gotten something else, but I've never received anything above $12. You can open up an IRA, a Roth, a retirement account
whichever one you prefer, whether it's with Webull, and I'll show you here because there'll be a link down below so you can sign up with Webull. And again, it's online, it's a platform, it's an app. So use the link down below. And also something I keep forgetting to mention, with Webull, if you go to the menu, they have paper trading. Paper trading means that you didn't have to deposit any money on the platform, but if you wanted to start following stocks and create a watch list or potentially purchase, because it's basically just an account that doesn't have any real money, it's like monopoly money, and then you could always see that if you invested in this particular stock, what would have happened. You can also learn how to, buy the stock on the platform. It's very simple. If you're used to online purchasing, then there shouldn't be an issue. And the same goes with Robinhood. As far as the way you can purchase online, Robinhood doesn't have paper trading at the moment. They were talking about adding it, but who knows. But Webull actually has paper trading. Now, let's get down into the twilight zone, because a lot of people hear this from their mutual fund person, their company, 401k, doing all this crazy stuff, and they say, our funds usually generate between X amount and X amount per year, but we can't guarantee anything from past returns. And now the disclaimer is, I'm not a financial advisor. I'm not a financial broker. I don't have anything to do with any financial things such as stocks and bonds. I'm just a YouTube guy telling you guys what I invest in. So for instance, today I invested in Welltower. Again, it's a dividend stock. T-Mobile, dividend stock. And Gladstone Capital, which is G-O-O-D. G as in George, O-O-D as in David for podcast listeners. And T as in telephone for AT&T. And Well, W-E-L-L, Tower. And W-E-L-L is the stock code. Tower is the other company that I invested in today. All three companies issue dividends, which I'm going to discuss later, because a lot of people do not understand that if I'll use a simple number, you have $1,000 that you invested, and let's just say your dividends give you 7% across the board on average, let's say, that means you're going to get your 7% in dividends at the end of a year. And mind you, most stocks issue dividends every 3 months, which is called every quarter. So for anybody that's new to investing, that's how simple it is. Then other people invest in stocks such as, let's use Elon Musk, Tesla. Tesla stock does not have dividends. However, Tesla used to trade, like, let's say last year, the price was probably 350, somewhere in that range. I don't invest in Tesla, but it was 350 or something. Right now, it's double that. So some people like investing in those type of stocks because they've doubled their money in less than a year. And even though you don't get dividends, it's still nice to double your money, and that's 100% on your money. Now, of course, it all depends on, is it 100% on your money because you're now going to sell it, or you're just going to hold on to it hoping it keeps rising. And quite frankly, I looked at Tesla's structure, and if they don't have any other interferences from other countries or the governments of other countries, even the United States government blocks them. Couldn't you imagine if they actually were able to have car dealerships like a normal car dealership, and they were on, in every major city with 20 to 100 vehicles on the lot, and you could just walk in there. They're blocked. That's why they have to be in places like malls or strip centers or some stupid locations. So they're selling cars based on being blocked, which is kind of awesome. And their technology and what they're doing overall as a company is awesome. So anyhow, I would recommend, even at the $762 price, is crazy, because a lot of times people would think if you bought Amazon for $1,000, you would think people were crazy, and Amazon still went up. So anyhow, this is about creating wealth. And by creating wealth, as you all know who's been subscribers before and anybody new, welcome again. You create wealth, and most millionaires have their 7 streams of income include making money while you sleep, which means stock market and dividends from the stock market and capital gains. All these are creating wealth for you, and you want 7 streams of income, whether that's earned income where you work at. Then you might want to have real estate income. That's a different type of income. Then you might want to have stock market income. Then you might want to have royalty income, like if you're in the music business or publishing business or writing books or whatever you do, you get royalties from that. You want that kind of money coming in. So you want to get up to about 7 streams of income if you can. I know it's hard these days, but we have online, so you can potentially do it. So we're creating wealth this way. And this is what we're talking about, trying to get out of the twilight zone, because here we have people talking crazy about how the stock market does this, that, and the other. Well, here's what I'm going to tell you. When you give your money to these other people and you don't want to do it yourself, you're basically just handing it off to another person and saying, well, I don't want to see anything. I'm just putting in, like most people in their 401k, they're saying I'm sending $300, $400, $500 a month into this company, into this fund, and you guys handle it. That's fine. No problem with that. But 1%ers, they do that, but they're doing things on a whole different level. They are running the hedge funds and mutual funds, or have insider trading. I hate to say it, but let's just face it. That's what the facts are. Everything is not equal, America. Everything's not equal around the world. The lower you are on the totem pole, the less information is going to be available to you. That's why the internet and YouTube and all the social media platforms are so important, because you can find a lot of different points of views, a lot of ways, and it all depends on your mindset. And if you're willing to take risk and you're saying, you know what, I got to go for this, because I do realize my 9-to-5 job, what I'm doing right now, I'm just making money. And if I get sick, if I get shut down from a pandemic, I have no money coming in. That mutual fund, that 401k that you have sitting there, that does you no good because it's not liquid. And then, of course, you might be calling up right now. There's some of you right now who say, hey, can I get some of that money out of that fund? And they're going to say, okay, we're going to waive the fees right now because of the pandemic. The only problem with that is I don't think the IRS is going to waive the fees. So any money you take out, that's going to be looked at as income. That's going to have to be paid. You're going to have to pay taxes on that income if you withdraw anything out of those retirement accounts right now. It doesn't get deferred. And I won't even get into deferred, because that Twilight Zone episode happened already 2 ago. But let's talk about inflation. As you can see right now, I put in Google. Like I said, all information is here. I put in Google the last 20 years, what the inflation rate is. And as you can see here, it's 3.2%. This is not on the positive side. This is on the negative side. So imagine you have $100 right now at January 1st, and on December 31st, your money's only worth $96.78. You wouldn't think that's cool, but would you think it's even cool that 2 years from now, it's worth like $95 or $94? So now you're going to have to make up that difference. So where are you going to make up the difference from? Now that means you're going to have to, in essence, you say, okay, let me put that $100, instead of holding on to it, let me put it into what vehicle? The bank at 0.05%? What do you, I mean, you're going to give it to a mutual fund probably, or you're going to put it in a retirement account. What are you going to do to keep your money? Because you're going to lose money to inflation. And every time they're printing money like what they're doing right here, stimulus package 1, done. Stimulus package 2, done. There's going to be a stimulus package 3, because like I told you guys before, the 1%ers don't lose in the Twilight Zone. You know that. Just get that mantra down. In fact, I'm going to make a t-shirt that says that. So let's get down to business here. So 3.2%. And look at what this even says. And if you don't think this is even dire, Look at this. That doesn't sound too bad until we realize that at that rate, prices will double every 20 years. Do you not see that? Remember that the value of 72. So when you think, what you do is you divide that 3.22 into 72, and that'll tell you how many years something doubles. Okay? And that's basically what they're saying. In 20 years, so whatever something cost in the year 2000 has doubled pretty much. So all I'm trying to say is this is why you have to find investment vehicles, and this is why I advocate everybody to learn a little bit of something and have the money in your possession, or at least have it to where, like for instance, today if I wanted to sell Tesla stock, which I do not have, and I said, okay, let me sell like 5 shares, I would get whatever, $3,500, $3,700 out. It'll be in my account on Monday. The mutual funds and financial planners and hedge funds and all that, your money's not coming in 3 days. It's not going to happen. Okay? And you're going to have to pay penalties to get it out. And you're going to have to pay taxes to get it out. So just keep all that in mind, and that's why I'm saying you have to pay attention. We're creating wealth, and one way is to do the stock market. You join the 1%ers in this. They're going to make sure that doesn't happen. And here's the actual average returns on the stock market. And we're talking about Standard & Poor, the S&P 500, Dow Jones Industrial Average, and then there's a smaller one called the Russell 2000. You can see right here, the Standard & Poor over the last 20 years is 5.9%. Does that make you jump for joy? Come on. Does the Dow Jones at 7% make you jump for joy? Russell 2000 at 7.7% over 20 years since 2000? And you're sitting here thinking, man, my 401k went up. Yeah, it went up because when there was from 1900 to 2900, of course, everything went up. But as everything happens in life, what goes up must come down. So keep in mind, ladies and gentlemen, be nice to the people on the way up, because those are the same people that you're going to meet on the way down. Karma. So all I'm going to say is, this is not a ringing endorsement. When you're sitting there and you have a job, or you're sitting there with the financial planner and they tell you, hey, you know what, we get you 5 or 6 or 7% a year. Nowadays, you might be excited, especially when a bank only does 1%, maybe. Best case scenario. So then you're saying, oh yeah, that's cool. But think about this. What if you had the money yourself? And you were savvy enough to say, hey, you know what? Let me put my money in Tesla. Let me put my money in Amazon way back when. Let me put my money in Facebook way back when, or Apple way back when. And Apple split, like, I think it was 5 years ago. My friends who weren't retired and had no access to their funds, I called up all my friends and I said, Apple split. Apple at the time was like $150. It went down to $75. And I called up all my friends and said, hey man, you might want to get some Apple right now. And they're all like, man, I send money into my investment, this, that, and the other. Well, Apple gives dividends, and like I said, 5 years or 4 years, I can't remember the date, but 75, they were down to 75, 79, 73, 70, and now they're over like 250. So a person could have gained $180, $170 per share. Some of us are lucky, but I was liquid already. I didn't work for anybody else. I worked for myself. I'm the CEO of my life, and I'm acting like it. So I get to the spoils go the victor. Okay? So while their stuff is locked up, they can't make a move to go buy Apple. I can make a move to go buy Apple. All right? And a lot of you might be asking me, hey, Eric, can I have an LLC that invests? And yes, the answer is yes, you can create an LLC as an investment vehicle for stocks and turn it into a business as well. But anyhow, that's a whole nother video. Now, let's continue with the Twilight Zone, because I just wanted to give you guys an idea. You're not earning 10, 20, 30% on your money just because you keep it in the stock market. you have to pick certain stocks. You have to understand certain things. And basically, the top 50, top 30 companies, the biggest companies generally are going to do a little bit better than most, because those are the ones where most of the investors or one percenters have put their money into, and they're running those companies, and they want to make sure that they don't fail. So this is why Warren Buffett sits on the sidelines with billions of dollars and says, okay, I'm going to buy Coca-Cola, or I'm going to buy Delta Airlines or American Airlines. I mean, all these guys, they're on the Dow Jones. So you have to keep all this in mind. Now, let's keep going. 20 years of stock market returns by calendar date, because this also is a ploy where they get you. So now think back. This is on the S&P 500. Look at this. 18.5% return one year. 87, which included the Black Monday, where the stock market just dropped like 20, 30% one day. So that ended up doing a 5.2%, 16.8 in 88, 31.5 in 1989. But here, look here, 1990, negative 3.1. What you guys have to understand is whenever something goes negative, it takes you double that amount to get back. So in other words, if I go down 10%, so I'll use a simple example. I have $100 in the bank. I lost 10%. So now I only have $90 in the bank. Even if I gain back another 10%, that means I only have $99 back. So some people think, oh, I broke even. But no, you did not break even. Now, in order to make money the following time, you have to at least get another 3-4% just to break even. So when you have these things such as 31%, 30% on your money, you can start saying, okay, that makes sense. I understand, Eric. But keep in mind, when you have these negatives, that drops it way down. Okay? Now, look here. 30% in 1991, 7.6% in 1992, 10% in 93, 1% in 94. Here's 95, 37.2%. Man, everybody's loving life here after 1987 black, except 1990, there was a little dip as well. But that's how it works. So now what happens, a whole like another 9-8 years go by until we come to the dot-com bubble. Boom, negative 9%, negative 11.9%, negative 22%. So just so everybody on podcast, in the year 2000, negative 9.1%, 2001, negative 11.9, 2002, negative 22.1. Now, in order to get basically back to any of this, somewhere along the line, you're going to have like a 25 to 30% increase one year, another 25 to 30% increase for another year, and another like 20% increase for another year. And look what happens. In 2002 or 2003, it's 28.4. So we get 1 year back. 2004 is 10.8. So we don't get back even the 2000 at 9.1 yet. So now we're just like still in the negatives. And then we have 4.8 in 2005. We're still not back. And in 2006, we're at 15.7. We're just now getting back into almost even. And then in 2007, we would probably get back to even. But then what happens? The Great Recession, and now we're negative 37. In order to get back negative 37, you're going to have to get back 60. You follow what I'm trying to say? Just to be positive and in good standing. So you can see right here, for a 10-year period, you're not even making any money, but yet your financial planner in the Twilight Zone is going to tell you Standard & Poor earns on average 7% per year. Now, it all depends on when you enter the market, when you leave the markets. But again, over the course of time, you have to leave your money in there. It's not liquid. Okay? But if you invest yourself, which is what I'm advocating, your money's liquid. And you can make moves. A friend of mine, when I went, I'm not going to say where because you guys know where it is. But anyhow, a friend of mine told me that they have a financial planner. When the stock market was going down those 4 days in a row, I was in the office, and she says, yeah, my financial planner called me and asked me what I should do. And I said, sell. And most people, financial planners in the Twilight Zone, are going to say, keep your money in there. In the long run, it goes back up. Yes, in the long run, it does go back up. But here's the point. In 2008, when the stock market basically did what just happened recently in the last 30 days, right now in 2020, lost 37%. Now, wouldn't it have been nice if you sold when the loss was only 10%, or sold when the loss was 15%? Why are you going to just keep your money burning all the way down to negative 37%? That makes no sense. But of course, 1%ers, because that's what we are, we're going to tell you to keep the money in there because we're going to use your money. As long as you keep that money in the mutual funds and 401k retirement plans, we don't have to pay it out. We can keep at a loss. We can keep losing your money. But when you start saying, I want my money, we got problems. So of course we're going to say, keep your money in there. So what happens after 2008? 2009, it pops up to 26%. But as you know, you're still not even at the same amount of money you put in 1999. You're still sitting there going, man, I put in $1,000 and all I got now is 940. You're like, man, even after this 26%, what's going on? Then you look at it and be like, man, if I would have had access to my money, I wouldn't have lost 37% this time. I would have lost maybe 10 or 15, but not 30. And that difference right there is the difference between you creating your own wealth and not, because you might have dropped at 15%, you would have said sell everything. Then you would have re-entered the market at a particular time, and maybe you wouldn't have earned 26.4, but it would have been a hell of a lot better if you earned 20 or even 17% or something. So then you didn't have the loss factors. So now the following year in 2010, we got 14.9. And from 2010 up until 2017, in 2017 it was 21.7. 2018 we have a loss, negative 4.5. And then in 2019 the big kick, 31.3. Well, guess what? Unfortunately, in 2020, unless things change, which is hard to fathom because of the pandemic, we are already down 30%. So now we're negative 30 again. And it's going to be hard to tell somebody, and they go, yeah, my 401k. Yeah, a lot of my friends, they invested since 1985, 86. They got up to $1.5 million in their 401k. It went down to 1,000. In fact, under 1,000, because they unfortunately retired when this thing dropped like 30%, and then it even dropped a little bit more. So that was a terrible hit. But again, most people don't understand how this works in the Twilight Zone. You're thinking, man, these guys are handling my money, I'm safe, I'm sound. And never mind, I didn't even mention the 0.1, the 0.5, the 1%, the 2% of your money being siphoned off because you have it in the hands of somebody else. Or you have it where you have an actual trade account and you're paying commissions and fees. And that's one of the reasons why Webull, Robinhood, and a few others, M1 Finance, showed up recently to have no trading fees, no commissions. And that's why stockbrokers are on the decline. But you always need a financial planner when you do have hundreds of thousands of dollars or millions of dollars sitting around. It would be wise to have a professional, because now you have options other people don't. Ordinary citizens, the OCs like us, we don't have those options to have 5 people in a room or somebody that's just dedicated to watching the stock market or watching a way to produce additional funds for you. Because don't be fooled. People, there's a reason why there's a Merrill Lynch, there's a JP Morgan financial division, and people go in offices and talk because they have people who are dedicated to finding ways to increase their money And it's not all through the stock market. Remember, those 7 streams of income is the average that most millionaires have. So that's where they get it from. They'll call them up and say, hey, there's a multi-family apartment complex over here that another client wants to sell. It's not even on the market yet, and you're getting 25% on your money, and he's selling it at that rate. And what do you think? And they talk amongst themselves. Next thing you know, deal gets done, and you know nothing about it. Why? Because you're not in that realm. So now's the time to get in that realm. You want to be a 1%er. All right. Now, I'm going through this fast as I can, so thank you for staying here and watching. But this dot-com bubble that happened in 2000, a lot of you may not know or paid attention because you're too busy working 9 to 5 and just heard about it. But this is what happened. What did we learn from the dot-com stock bubble of 2000? Apparently, people didn't learn nothing. I don't understand what's going on here. People are losing stocks again in 2008. I'll get into it. Where's my other? I had another one. But I was looking for my two. Here it is. The Great Recession of 2008. In 2000 something happens. They're blaming it on the mortgage crisis in 2008 that something happens. And now here it is in 2020 something happens. And people are still running around living paycheck to paycheck, can't pay bills unless they get socialist money, as I call it, because I'm a capitalist. People have to get money from the government in order to live from month to month. So a person is out of work for 1 month, not even. There hasn't been stay-at-home orders for a month yet, and people are panicked. They're sitting there going, oh my God. That's right, check out that video. Oh my God, I'm losing everything. Check that video out. And then those who were already paying attention and weren't in the twilight zone was sitting here going, hey, that guy, Stop Struggling Now in 2018, who's telling me to add some additional streams of income, maybe do it online. Maybe you're thinking, man, I'll just try it. But right about now, that extra $200, $300 or $500 or $1,000 or $2,000 is coming in. That's coming in real handy about now. So if you're not going to learn your lesson from 2000, you didn't learn your lesson. You went back to hobnobbing, acting like, yeah, whatever, I'll just use my credit cards, buy stuff. In 2008, you're going, well, yeah, I know people were able to get loans and they defaulted, and they're calling it the mortgage crisis. But was it really a mortgage crisis? Come on. It wasn't really a mortgage crisis. The only reason it's a mortgage crisis is because people with bad credit were able to get loans. Of course, the 1%ers need money. What's the best way? You make sure somebody can get me a loan for $400,000 real fast. Instead of only 30% of the population can qualify, we open it up to like 50% of the population can qualify. That means trillions of dollars gets to move. And then we get to package them up as derivatives. You guys have heard me talk about this before. I have $100 million worth of loans. I package them up. I go to Europe and say, hey, these are AAA rated. And we dump them. And they say, hey, we'll give you $50 million for those because we know they're worth 100 and people are going to pay us 100 plus late fees plus whatever else. And if somebody defaults, we'll get it in foreclosure and the value will be the same. Well, see, those derivatives went all shot to hell because once the housing prices go down, those packages they bought for 100 million was only worth 50 million. But the Wall Street guys got their 50 million and they're out. They're safe. They're sound. And guess what happens after that? They get to go right back in and buy up those properties at 50% of the value. And now, like I told you before in the other Twilight Zone, they own neighborhoods. They own blocks. They own apartment buildings because now they're liquid. They didn't lose $100 million. The other guys did. Mom and pop, you, me, we lost because they were holding our money in mutual funds and those went down. We couldn't take our money out of our retirement accounts. We couldn't take them out of the mutual fund accounts without penalties. So therefore, this is how they operate. And now here we are in 2020 and it's a damn shame. So now if this is not a wake-up call to get your wealth created if you have income coming in, I made a video on what do you do with your $1,000. I have some ideas. Half of it, put it towards stocks. And don't get me wrong, stocks can go down. Just keep that in mind. Now, and then use some of it for whatever else you need. Unemployment rate, 20%, 26.5 million jobs lost. That's what they're claiming. Ladies and gentlemen, stop believing the hype. Stop being in the twilight zone. Only 180 million, 185, 175 million people actually have jobs in America. If 20% of the people, they're talking about 26.5 million jobs. There's more than this. The Great Depression had roughly 30 million jobs gone. The Great Depression, there were not 325 million people in America at the time. So relatively speaking, there's more people out of a job than in the Great Depression. Hear me, Great Depression. How many times do I have to keep understanding? How many times am I trying to get you guys to understand what's going on here? Your 9-to-5 job is nice, but you need your other 6, 7 streams of income. By hook, by crook, you got to do it. All right, now let's talk about some numbers, because I just went over high school. It's a beautiful thing when you graduate. A beautiful thing when you come out and get a job. It's a beautiful thing that after you go to 4 years, 5 years worth of schooling, you're like 22, 23, 24. You get a job. I put in 36 years up here. 36 years of working. 36 years that you started your 401k or your mutual fund account with $1,000. You get a rate of return of 7%. And you put in $6,000 per year, which is roughly $500 a month. Like clockwork. At the end of 36 years, you have a little under $1 million. In this example, the reason why I use this example is because my friends who actually worked 36 years, they had $1.5 million in January in their 401k. After the decline, they had roughly about this much, 960, 980. After 36 years, and they let somebody else handle their money. A lot of people might say, hey, Eric, I'll take $1 million after 36 years. Okay. That's right. Work 9 to 5 or work 10 hours a day, work 12 hours a day, do all whatever you got to do. You have to pay taxes on this, ladies and gentlemen. All right? You don't get this amount. So you can shave off, even if I was conservative, which I won't be, but I'll even just say, why don't you just take off 15%? $130,000. Now, I'm not trying to scare anybody, but let me just give you a number. Let me just do something. So now you're retired and you're roughly what? From 20 to now you're 56, 57. Let's just call it 56. And let's talk about 900,000. And at 56, you're going to be 66 in 10 years. Do you think there's going to be inflation? Yeah, there is. Because they've been printing money. They've been actually basically giving people stimulus money, stimulus checks out of thin air. So that money's going to have to be accounted for one day somehow. So we have $900,000. We're going to leave 10 years at least. We would hope 66. And what happens if you live to 76? That's 20 years. Let's divide this by 20 years. It's not unreasonable to live to 76. $45,000 a year, ladies and gentlemen. Where can you live for $3,000 a month? All in. And by the way, that $45,000 I'm going to have to pay taxes on. So it's really not even 45. And there's inflation at 3% a year. So you can take away 3%, which is roughly 12, well, let's call it $1,500. Then you take away tax, let's call that 15% as well, which is going to be more, but I'll just use that as well. So you can easily see you're down to $40,000. Ladies and gentlemen, I hope you don't think that apartments or homes are going to stay the same price as they are now, even though they're going to probably drop in about 6 months or so. But even then, due to 3% inflation, we know that in the 10 years, in 20 years from now, your $45,000 is only going to be worth roughly about $20,000, $18,000 in today's value. We know this. So all I'm trying to say is, this is why you have to prepare yourself. And you have to figure out a way to constantly make more money. And how you do that is streams of income. Because it's good enough to invest, but you also want to have extra streams of income, whether that's selling something online, whether that's your own business. But either way, you want to have additional income coming in. So when we do our example and we have roughly $40,000 coming in, that's not enough, because clearly people make more than that when they actually have a job. This person makes more than that when they have a job. So now their lifestyle has to change when you're basically that's almost half of what they make now. So you're going to have a serious lifestyle change. So do you really want to be older and have to give up your lifestyle, and you're probably going to have a little more health problems? Think about all this kind of stuff in the Twilight Zone while you're in the Twilight Zone. So I'm trying to get you out of the Twilight Zone. All right? And here we are, up to date, 2020, out of work and cash. Millions of Americans are still waiting for their first unemployment check. I know some of you listening right now are sitting there going, man, Eric, I need some money. Now, again, these are the times that millionaires are made. This is also the time that people find out who they are. You can go to the Stop Struggling Now Facebook page. I have everything there for you. If you want to do podcasts, you can go to Buzzsprout. There's a link that's on the Facebook group page for Stop Struggling Now. I'll have a link down below for the Buzzsprout. If you want to make videos, I have, I don't even know if I put this on there, InShot. That's an app that's on your phone that allows you to edit and create videos. Video Leap also does as well. Those are places that if you want to do video and post them up on TikToks or Instagrams or Facebooks or Snapchat, you can create videos. If you want to promote something, be an affiliate marketer, Amazon just cut their affiliate fees down, or rates down, how much they're going to pay in commission. They cut that down. Knew it's going to happen. It's going to start squeezing. So you can still pick other companies. You go to OfferVault, and you can potentially become a affiliate or referral marketer, niche marketer, however you want to call it, and promote something. But you're going to need a website. You're going to need a way. Facebook page is good. Instagram under your company name or whatever you want to do. Or your name. It doesn't matter. But you got to start something, please. I am imploring, I'm begging you. Please start something. Don't be caught in the Twilight Zone to be left for fodder, where if you lose your job, you're done. Now, some of you are on the Uber side. Here's the gig workers who are shut down or in risk of catching corona. And because you're not officially employed, kind of employed, but not employed, independent contractor, they're finding out they get zero in unemployment benefits. That's right. The hazards of owning your own business. And this is one of the reasons why when you own your own business, you actually work harder. So anyhow, this is all I wanted to talk about today. It's more than what you're thinking, but all I'm trying to say is there's links down below to help you with a myriad of things. And I keep saying it. Fiverr can help you out. I pay $5, $10 for whatever I need, including if you want to do a website, including if you need somebody to make images for you for your Facebook logos or Instagram memes or whatever you want to do, you can use Canva, which has free, and they have things that you can create for all social media platforms for free. All these links are at the Facebook group, and I'll put a link down below for StreamYard, which helps you run live feeds on different platforms such as the Twitch, such as Facebook, such as YouTube, and you can invite people in so you can have more than one person on the stream. OBS software does the same thing. Streamlabs OBS is upgraded from OBS regular software. That works as well. So there's different things that you can do to make yourself benefit from the internet. As long as the internet's on, you should have no excuse. That's all there is to it. You know how to cook a meal. Put a video up. Give me a recipe. Come on. Maybe even sell the recipe or something. I don't know. You know, leave out the secret ingredient and say, hey, you have to buy it from me to find out the secret ingredient. I don't know what to do. But all I'm saying is, you know how to make something. You do body work on a car. Show people how to do body work. You know how to paint, whether it's the outside of a house, inside of a house, a model airplane. Well, roll tape. Monetize. That's what's happening going forward, people. You have to monetize yourself. Monetize your skills. It's the information age. This all started back in 2000, in the 90s. Information age started, and you're getting left behind if you're sitting at a desk. If you're working paycheck to paycheck, you're getting left behind, and you're losing part of the market share. That's what you're losing by not entering the marketplace. Because if you enter the marketplace, and give you a perfect example, YouTube started apparently in like 2009 or 10. There's a lot of people who came on YouTube in 2013, 14, 15. Those people to this day, when there was only 1 million people on the platform or 2 million people on the platform, they're the ones that have 500,000, 300,000, 1 million subscribers. Guaranteed, as long as they kept going. But to this day, there's roughly about 14 or 15 million people on the platform. There's still 7.5 billion people on the planet. There's still places that do not have internet that is still untapped. So the sooner you get online and get your real estate, as I've been saying over the last year and a half, the better, and you make your presence felt. That's all I have to say today, ladies and gentlemen. Now is your time. This is the time. You cannot sit by and go, woe is me. So please, like, subscribe, and click the bell below so you get the latest updates. And you know it's hard out here. That's why I'm bringing you these videos. Whether it's the credit, whether it's the investing with stocks, whether it's the real estate deals you want to do. And by the way, I'm looking for something in real estate right now, but I'm looking to do something that's totally different, and I can't let it out the bag yet because I always like to do a little twist, and I haven't done one project yet, but I'm working on some real estate projects right now. The reason being is because there are things sitting on the market. As you know, retail stores are closing down, so that means strip centers are going to be available for sale, but they really have no value if everybody's ordering things online. Not everybody, but you know, a large majorities, and now it's going to be worse for retail environments because people are now used to ordering online under the pandemic. So some businesses aren't going to be able to come back from this. So anyhow, with all that said, thank you for watching, thank you for listening, and keep your head up, keep moving, and I'm out.